Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the charts behind me, which are of GameStop, ticker symbol GME, as well as NEO, ticker symbol NIO, SOFI, ticker symbol SOFI, as well as Unity Software, ticker symbol U. And so I am recording this during market hours on Wednesday, September 25th. And, I wanted to go over hunting unusual whales. This is something that I've been doing, really kind of experimenting with using the channel to kind of explore, unusual whales options activity, diving into them, and kind of my rationale for either establishing some calls or puts. And these are the four tickers I'm going to go over with this. I have been doing this largely for members, but there aren't too many members of the channel. It is 99 cents a month. If you do want to join, you're welcome to. I try to create content that, highlights certain things that I'm doing and really just adds value to the channel. And but I just wanted to do this largely because I am really interested in these tickers right now. And I have been swinging either calls or puts on them. And my thesis for options and really getting more comfortable with them and trying to, capitalize on their volatility is buying contracts and then swinging them for 20% gains and then reevaluating. And, with that being said, that might not be of interest to you guys, but, I am really just doing this because I don't want to be diamond handing these contracts until expiration and then having them close either out of the money or just that premium going down over time. And I think Unity Software is kind of a nice example of that. Over the past couple days, I have been swinging contracts really just, one at a time for 20% profit. And so I did that, I believe on Monday, bought a Unity software contract for $100, swung it for $120, or that's, $1.20, $1 per contract, swinging it for $1.20, which translates to $100 to $120. 20% profit, pretty nice, but I could have made over 100% profit on that contract. But, now we're seeing a pullback. This is the 10-minute chart. And so, I kind of want to reevaluate these as I go and be taking profits and then moving on to the next one. And so I do have positions in some of these tickers. I will go over that in this video. Largely, it's going to be unedited just so I can have it out to you guys ASAP. And I am going to go through these in alphabetical order. So I'm going to be starting with GameStop, and I do have a contract with them right now. It's possible my limit will get hit as I record this, as it does look like GameStop price is going higher right now. So I do have a call with them, and so I kind of just wanted to break down what stands out to me as being unusual whales options activity contracts that seem interesting, whether that's because I'm getting notifications from people on X, or if just because I think the chart looks really good, supporting anything that I see online with technical analysis. And so that is what I'm going to be doing here. And so with GameStop, I am now going to flip over to these contracts that I have bookmarked for, GameStop, NEO, SoFi, and Unity Software. I'm not long all of them. I'm short some of them, just like SoFi here. I have talked about that, did put out a video on why I am short SoFi. But anyways, getting into GameStop calls that stand out as being intriguing to me. I've got the $20 strike and the $21 strike, as well as the $25 and $30 strike, all expiring on October 18th. So that is the next monthly options contract, expiring in October. And so, I just wanted to go over these. And so one of these contracts, I had been swinging the $30 contract, the $30 call, but I don't necessarily think GameStop is going to be at $30, or at least not closing above $30. So I had been swinging this for, buying at 50 cents and then swinging up to 60. And so I am currently not holding one of these contracts. It didn't dip down to 60. The one that I am holding is the $25 strike. Let's see, let's just wait for this to load. And I bought one of these at $100 or $1, and I had a limit placed at 120, but then I just adjusted that to 140. So that's a 40% swing, because a thing I've been noticing with these is I'm getting better with my analysis of these contracts relative to the charts, relative to the sentiment, the momentum. And I could be making more than 20%. And so right now I have a limit sell at $1.40. If that fills today, great. If it doesn't, then I'll kind of reevaluate tomorrow, and maybe I just set a limit sell for 120. But this one does stand out to me just because looking at these other contracts, the $21 strike over here, let's just wait for this to load. It's getting into, $200, over $200 per contract at, over $2.40 for that premium per 100 shares. That is, $2.40. It's just getting a little bit too pricey for me, and I do think that price will be above $21. I think it could be above $25. As you can see here, current price is right around $22.69. And then again, this contract here, the $20 strike, let's see, that's trading over $300. So let's flip back over to the chart, and so we can dive into this, and I am going to switch over to the daily time frame. It does look like, it's putting in a little bit of a top there, though. So maybe, it's a good idea to do that 20% swing rather than the 40% swing, getting a little greedy there. But anyways, looking at the chart here, my thought process is, we've got this uptrend. We did break it, so it doesn't look too good. But if we do connect, let's see, some of the, we could connect the lows over here. So yeah, I'm just doing some technical analysis with the chart here. So if I'm looking at the low of 1770 over here, and then the pivot low from August 5th, that was at a price of 1873. So I'm going to draw a ray between those. So 1770, and the low here was 1873. So I'm just going to make sure, lock that into place, make sure those levels are correct. So that does look good. And let's see, price is above that, so that's looking good. And just to make sure that this is crystal clear, that level does stand out from the other ones, I'm going to color it purple here. And so my thesis with this, looking at the chart, is while we are below this orange uptrend, which is the pivot lows over here, going back to this low of 995. I think that's a pretty important level. We have had this up move. So that was on the 20th, so on Friday of last week, going up just about 12% on the day. And it looks like it's consolidating up here. So that's making me think this could be a bull flag, and this could be breaking out higher. And the levels up here are like right around $25. So $25 strike for October 18th. That makes sense to me. And so that is why I established one of those positions. And let's see, I am going to flip back over the 10-minute time scale. Does look like we could be putting in a top here, maybe like a double top. This is the 10-minute time scale, so it's not necessarily a long-term level or anything. We could be going up to Roaring Kitty's level. It does seem pretty feasible. That's at 2341. And so I'm just going to look at my phone real quick to see what this is trading at, relative to my position, because I look at that on my phone. And so it looks like it, wicked up to a high of 122 for the day. And, so my order would have been filled for that 20% swing, but I had upped it to 140, got a little bit greedy there. And we can actually look at that over here, looking at the data from the, open interest contract lookup. I do that by going to the options data here, the flow data, this wave here, options contract lookup. So that is where I'm at. And so looking here, this, it actually says it didn't get up to 120. If we look down here at the highest fill, 122. So my order would have been filled. So it's like, dang it, I could have made 20% in and out, rinse and repeat. That is how I like to do options. But, I am not really too concerned. I think that 25, like I said, is pretty reasonable for GameStop. So that is where I am at with that. Do I plan to buy another contract if it dips lower? Probably not. I feel like the way that works for me of risk management with contracts is just do one. Whenever I buy multiple, double down and get greedy, I end up kind of losing money on that in the end, and it gets too many emotions into it. So now I'm risking $100. I'm fine with that. I could exit at making a little bit of a profit right now. So, it's not that big of a deal. But I feel like this could be bouncing and could be going higher. So I'm really not too concerned with that. And, looking down here, we can see that the open interest has been going up. There was a little bit of a sell-off of these contracts on the 19th, but then that was just, picked up following that. So, I'm not really too concerned with this, and it looks like, premium traded on this hundreds of thousands of dollars. Today just started, so over here, it's like 85,000 right now. And yesterday it looks like there was a little bit of a sell-off, but, that's fine. I think, I'm taking advantage of any dip right now to reestablish. And so, I'm not too concerned, and if I do lose $100, that sucks, but, that's my way of managing risk. But anyways, I will probably come back to this at the end of the video. I may not add timestamps just because it takes a long time for me to do that and edit whatnot. So, hopefully this is useful for you guys. And now I will switch back over to the charts here to look at NEO. And so NEO does look like it's getting rejected around 6. And so I believe I actually bought a call on this. I believe I also have a put on NEO, but I got rid of it because I'm not feeling too compelled by it. And actually, yes, I did buy a contract, which I am down on, but not down by much. I am just adding this to my holding list so I know that I have the contract on there. But anyways, my thesis with NEO is basically, I've been holding a bunch of shares, and sorry for all these levels. I should actually delete some of these just to clean it up. They're a little bit cleaner, but still a lot going on with the chart. But basically, my thesis with this, I should delete this as well. Really just clean up a lot of these levels. So my thesis was, I was accumulating a lot of shares, but I kind of lost conviction because there were so many failed attempts to break out. I thought this was an inverse head and shoulders, failed to break out. And so, I've been selling covered calls, and I ended up exiting my position, unfortunately, above my average, so good. But unfortunately, I had sold one covered call contract at 450, one at 5, and that was when it moved up here. So it was above $5. One of those, I was fine with the $5. The 450, I could have made more money, but my average was I think around like 430, so I made money on it. And then I had bought a put thinking, oh, well, I think this is going to come back to like retrace to the scene of the crime around $4 here. But then I started to realize like this looks like it's a bull flag. It looks like it's starting to break out. And so I think that this is going higher. And, I was wrong in the put. I was wrong in selling the covered calls. I should have just held my shares. But, selling covered calls is a nice way for me to get out of position. So I'm not diamond handing. And I'm not just like waiting for this and then I can reevaluate. I think this is a bull flag. And we can see, this purple downtrend that I have drawn here based on the high of February 16th. And then also the high from May 15th. That's how I get that. Thought it was an inverse head and shoulders, but it didn't play out. And so now it looks like, we got a close above that level. Now we're kind of retesting it. And so we hit a high on the 24th, so September 24th yesterday, which was Tuesday. We hit a high of 596. It looks like it was getting rejected from $6, this dashed line here. And so I'm kind of thinking, I think this is a pullback and a retest. I think it will be going higher. And I think it could be going up to $6, $7 a share in the coming weeks. And I think that right now this pullback is really just a retest of that. But maybe it's wrong. Maybe it does break down. And so I'll go over some of the contracts that I've been looking at and the one that I did pick up, which currently I am red on. I did buy the contract this morning, but I do have more than 1 month for that expiration. And I'm actually just going to check on my phone to make sure that I'm looking at the correct one. And so, yeah, I have the November 15th expiration, but I will look, going down this list here. So one is a $6 strike for October 18th, considering that price is right around $6. If we're looking over at the chart here, or actually was right around $6, that seemed a little risky to me because I think there could be a pullback, some consolidation before a move higher, or maybe it breaks down, maybe it fails, maybe I'm wrong. So I didn't think this was a good one considering where price is at. And but yeah, let's see. We also can see that from yesterday there was a lot of selling, but from yesterday, we see 9,500 contracts traded yesterday, but there was a net sell-off of those contracts. We went from like about 22.8 thousand now at 18.8 thousand. And so that open interest has gone down. There has been a net sell-off in these contracts. But, that doesn't necessarily mean that this is going down. If I do flip this over to the 2-day, we can see there's a good amount of sell-off here, but then it went higher and now it's pulled back. I think that this is a dip buying opportunity, but I think that the 18th is a little too risky. So I opened up a position. I had a limit buy at 65 that at open filled at 60. And so as you can see, I am in the red with this, but I'm risking $60, not too big of a deal. And I think that this could be going higher, and we have seen this one increasing the open interest from yesterday to today. almost 33,000 contracts open, and so I feel pretty good about this. And on the 24th, there was a total premium of like 500,000, 500,000 traded on it. So I feel like this one's pretty good. Oh, and actually, I was talking about this contract. This is the one that I have. So let's see. I was confused about that. Sorry about that. That I bought this at 60, and so I am in the red, but it does look like we are getting a bounce. If I flip over to the chart over here, look at the 10-minute time scale, pull back, but it looks like we're getting a bounce. So, this could be a nice swing, and I do have a limit sell placed on this one at 72 cents, 20%. That's what I'm about, so I'm happy with that. And, we'll just have to wait and see. Over here we can see the premium. So it does look like, call premium in green has taken a little bit of a pullback, a dip. But it is bouncing. It is going higher along with price now. So, we'll see about that. Whereas put premium is kind of off this chart here. Looks like it's gone up a little bit. I feel like NEO overall looks bullish, overall looks good. So maybe by the time I finish recording this video, this will be back up at 60. I'll be at break even. So that's fine there. Another one that stood out to me is the $8 strike for November 15th. And that's largely because, there's been a lot of, volume traded, like almost 11,000 contracts traded yesterday. But, a lot of those were, it looks like on the sell side because the open interest has gone down between yesterday and today. So good to, factor that in. A lot of selling here. This one, this is, risking, $16. 16 cents per contract. So it's like, pretty not so, you can do this and not risk a lot of money. But it's just like my thesis looking at the chart is that price could maybe be getting up to 7. By November, let's see, that's like where the cursor is here. I could see that. I could see a continuation going higher. And then up here, like $10, maybe it could be getting up there. I just think that would take longer. So I think like $8 around where the cursor is here, which is like lined up with November 15th as well. That seems like, a little bit, ambitious. So I'm not as intrigued by that. Just from like a risk standpoint, but 6, I think price, I think I could swing that for 20%, no problem. So that is why I established a position there. not the $8 strike. Then there's some other contracts that also stood out to me, one being a $6 strike expiring of December 20th. This one, could have, maybe bought the dip here at, let's see, that average fill 73 cents and then swing that. 77, that's not 20%, but, that is something. So it's just for me, December 20th, that's too far out. I'm more intrigued by the November 15th. But if we do look at this, and I'll actually go over. So I didn't do it over here, but if I do look up, this is kind of, how I find these. I just do a search for the stock, NEO, and I see what's going on here. And then I look down here. What are the calls, puts, whatever contracts that have had the highest volume traded? And then so I kind of look into those. If they expire, like this coming Friday, I'm not interested in it. That's too soon for me. Same with this one here. And so there are these other contracts that I've been looking into, really going out to like basically as far as like December 20th. And so I do that by the contract lookup. That's by Ticker Explorer. And then I just do overview. And that is how I, pull this up, and then you can see the premium here for the calls in green and puts in red, and then the stock price in yellow. And so the net call premium does kind of follow the price there, and the put is really just like the inverse of that. And so that is what I've been doing here. Other contracts that have stood out to me, one being the $7 strike expiring December 20th. And again, looking back over the chart, $7, that does seem feasible, and that does give, an extra month, a buffer. So I feel like that is somewhat intriguing. I don't have a position in that call. I don't plan on establishing one. I'm just going to see where the $6 strike for November 15th expiration, see where that takes me. Ideally just for 20% swing, either rinse and repeat or just rinse and don't repeat and move on to the next one. And so another one is a 750 call. This is for January 17th. This is potentially intriguing. This could be, this is below $50 or 50 cent strike, 50 cent premium. Translates to $50 per contract or less than that. And so maybe this is a nice swing it from 50 to 60. That's 20% in and out. And so, I am intrigued by this. But now I'm just going to flip back to the chart over here. Excuse me for my net crack and whatnot. I'm just going to now go over SOFI. I have talked about, in the video that I put out that I think there are some topping signals. I had some puts, but then, following the trading day of the 23rd, I got, a little bit nervous thinking that, there could be a reversal and this come up to test this downtrend. And so I sold all of my puts. I made 20% on them, for the most part, or more than 20%. I could pull up the numbers exactly, but it doesn't really matter. One of the contracts I made like 50%, and these are premiums that are not super high. So I'm not making like hundreds of dollars or anything. I'm making like tens of dollars or fives of dollars. Nothing too crazy. But this, is trading below $8 a share. I just saw that, this could be respecting that 236 bouncing. And I didn't want to just, I want to be rinsing and repeating. I don't want to just be diamond handing. And then maybe I end up being wrong in the end. And so, I was a little premature with that. But, I was kind of correct in that there could be a bounce. We did see that yesterday on the 24th, wick down, close higher. And so, maybe we're going to be seeing a retest of this downtrend. And maybe we're, testing the top of this, and we get a breakout. So, I just kind of wanted to prepare for, maybe I'm wrong, take the profits, or maybe I'm, wrong long-term, right short-term, so take profits. And so that is what I did. Now trading below $8. And that is kind of like the contracts that I've been looking at, the $7 and $8 puts. This one that's first here is looking at the $7 strike for October 18th. I had been swinging this let's see, around 7 cents, but it was kind of like not too dynamic the past few days. We can see, premium here was like right around 7 cents. And, I just started to think like, maybe I'm wrong about the trade, and I don't necessarily think it's going to go down to $7 a share by October 18th. So this is one I'm no longer trading. I just think it's too risky at this point. I do think that the $8 put, though, for the expiration of October 18th is still intriguing. I had been swinging this, and I exited. I think at like 24 was kind of like my average fill. I was holding it. Let's see, pull up like the past week. And so, yeah, I mean, I like got some fills over here around 24 cents. I could have, more than doubled, but I think I settled for like a 50% swing. So I sold at like, I think 38 actually. Yeah, right here where there's this average fill here, 38 cents. I could have held, I could have made more, but then it's like pulling back and then it starts to get into the emotions of it. And so I didn't want to do that. And so I don't believe I have any positions in SOFI now. Because I don't think any of them have been filled. But I do have an order placed, but not for this expiration. $8 strike, but not for this expiration. I just feel like we're getting too close to it. And, maybe I'm wrong. And so I want to have a little bit of wiggle room with that. But we do see, from yesterday, the open interest did come down a little bit by 2 contracts. And those were actually probably maybe my contracts. I'm not sure. Probably not. But, maybe I am the net that did that. So kind of interesting. But then, looking over here, $7 put for November 15th. I had some of these contracts as well, but I don't have them anymore. I think that coming down to $7 is a little risky. Looking over at the chart, I could see it happening. It's coming down to here, but maybe it just takes its time coming down to 7. And so I feel like that's a little risky. And so I feel like the more safer bet with this, let's see, I'm just looking at the open interest changing here, still going up. But I feel like the safer bet is the puts with an $8 strike. I placed an order, if I just look at this on the 1 day, to get filled at 50 cents, and it has not come down to that. So, maybe it doesn't get filled. That's fine. I made some money with this, and, I'm fine to walk with that money. A little bit of money, not a crazy amount, but it's really just practicing 20% swings or more than that, or less than that if I feel like the trade is going south. And so that, I'm just trying to practice 20%, whether that's $20 if I'm risking $100, or if it's less than that, that's fine. I just want to get in the practice of getting familiar with the dynamics of contracts, how they swing, how I make some money. With that 20% right now, one contract, $100, that's $20. But if I get more familiar with this process, I'm not getting greedy. Oh, maybe it goes to 25. Oh, maybe it goes to 30, 40. Like I did with GameStop. I just rinse and repeat 20%. That is solid. And so here, SOFI, this is, how I kind of look up the ones that stand out to me just by going over to the Ticker Explorer overview and looking up SOFI. And so here, these are ones, initially, these are all too soon, expiring within a couple of days or in, 9 days. So next Friday, that's too soon for me. This one too far out, January 17th. I'm looking for more of a pullback sooner. And so, I see puts 750, but really it's just a lot of calls. So, again, this is maybe, telling me that I'm wrong, that, there's more bullish sentiment that this is going to be going higher. So I think it's good to be taking that with a grain of salt. And so with this one, don't have a position, and I don't plan on establishing one. And so now I'm going to get into the Unity software chart. This one's really exciting because, I have been mapping this out for a while, and I just I'm not a big fish. I'm not a big player. So, I swung some shares, and then, this took off kind of like as this inverse head and shoulders pattern that I've been talking about. I wasn't holding any shares when it broke out because I was waiting for it to pull back to 1550. That didn't happen. Very close. Now it's kind of ripped faces off. I'm looking for a little bit of a pullback, or really just to see if it, consolidates. That's a bull flag, and then it could continue higher. And I could see this going up to 30 plus shares in the next couple months. And, so that is kind of why I'm excited about this. I've been seeing a lot of thoughts shared on this on X, and potentially that, roaring kitties in this. So, I find this to be a really exciting play. And, I had been talking about, this moving up to the midpoint. We're now above that midpoint. So maybe there's a pull back to it. That would be coming down to like 21 bucks. Could be happening. And then, I have, these levels marked at like 33. That's like around the top of the channel. And then also, maybe there's this cup formed here that'd be coming up to like 25. But maybe we get up to these highs, 44. Right around there, 43.50. So I feel like there's still just a lot of upside potential with this. I just think it probably needs to cool off, as yesterday it had an 8.5% move as far as the stock goes. And, it does look like the RSI is above 70. So maybe it needs to cool off a little bit before continuing. And I think that we're seeing that today. And so I do have some orders placed, or no, actually I don't, because I wanted to see what happened. We just seem like we're getting this pullback. And so I think it's healthy. And so now these are the contracts that I have been swinging with this. This one, this is kind of bittersweet for me because I was holding contracts, I guess, back here at, $1. I bought, so that's $100, and I swung to 120 or $1.20, made 20 bucks, 20%. That's great. But if I would have just held that, I would have made more than 100%. It's a little bit disappointing, but whenever taking profits, you're never going to take profits right at the exact top. And so that means that the price is always going to go higher than you sell, whether that's the price of the stock or the price of the premium, whatever it is. And so taking profits, you're always going to be walking away from, oh man, I could have made more money. And so this to me is like bittersweet because it's now, over $2. It's over, 100% what I would have made. But that's the name of the game. Rinse and repeat. And, I had sold multiple contracts, $100 to $1 to 120. So I made like 40 bucks on this. And, that's just the name of the game. And, I think that there could be a cool off and whatnot. But with that being said, maybe a $30 strike is more feasible, and that's risking less money. This one I had swung for, I'm not sure exactly. I think around 24. Yeah, I think around 24. I'm not exactly sure. But I exited those yesterday as well for the $30 strike, both of these being expirations on October 18th. But, maybe I want to look up some other expirations because October 18th, that's getting a little bit close. Maybe there are some contracts that, are further outdated that are maybe of more interest. This call $45 strike, that just seems a little ridiculous to me. But, I was just talking about looking at the chart, $45 call. So maybe that's one of interest. I don't have any orders placed, but talking about this, I'm interested in this one. And this premium traded in this time frame is 30-day, for today. So far about 100,000. Premium's going up here. This is one that's of interest, and this is 114 days to expiration. So I don't have an order placed. I probably will place one after I post this video, but maybe not. So take it with a grain of salt. But yeah, this looks really appealing because it's, risking 40 bucks. So yeah, this is really intriguing. So I'm excited about that. So I'm just going to refresh this. That is the contract that I'm probably most interested in right now. Look at this on the past 3 days. This has had no momentum, and now it's like, the trend is your friend. You got to think about that. You don't want to go against the trend. The trend is this premium's going higher. This contract's just been put on the map. Because if I look back Yeah, I think over here. Yeah, it's really just like been trading down here. Candle premium or average fill 6 cents. Now it's at 40. So, I mean, yeah, I mean, this is crap, man. What's going on with the stock price? This is going up higher. Yeah, so it's back up at 23. So yeah, I might actually, don't tell anybody, but I might place an order to buy one of those contracts at 40 cents. So we'll see. Let's see. I just got to do this. Let's see. Yeah, so I guess I'll just pull up what I'm doing on my phone, looking up calls for the January 17th strike of $45. And that's at a fill of 40. So, just as I was like recording this, that was changing. So that's kind of why I want to place this order, right now, just so it's done. $45 strike. It looks like the buy is 45. And so I'm just going to place my order at 40. And if that gets filled, great. If it doesn't, that's fine too. But I feel like there's enough time between now and January to swing that for, it's not really that exciting, but 20%, 40 cents, that's going up to 48 cents or $48. I make $8 on that. But maybe I want to diamond hand it because I'm only risking $40 and I've already made $40 swinging Unity software. So yeah, just looking at this on the daily, I think going up to, this could be, yeah, like this could be an inverse head and shoulders pattern on this scale. Like check this out. This is approximate, but right there, 43, 46. I'm going to make this actually thick and purple there. Lock that into place. This could be a head and shoulders pattern. And if it is a head and shoulders pattern, that could be suggesting that price, whenever it would break approximately of that neckline, that could be going to like $73. Does that seem feasible given the history of the stock? I'm going to have to switch over to the weekly time frame. Yeah, seems feasible. And that actually seems like resistance over there. So I'm hoping that the order gets filled that I just placed. But if it doesn't, that's fine too. But I feel like this is a really intriguing one. $45 strike for call expiring on January 17th of 2025. Got over 100 days. Wiggle room for that. And so I think that, if it does pull back and I get that fill at 40 cents, maybe it pulls back to 30 and maybe I could add another contract and I'm risking 70. I can take profits at 20% for one and then hold the other for the longer term. So I find that really, really intriguing. And so, I hope that, hunting unusual whales like this was useful for you guys. This is useful for me, and that's what I'm trying to do. I'm trying to add value to the channel, whether that's for members, whether that's for viewers, or for myself. I am getting more interested in swinging contracts based on, technical analysis that I'm doing and, seeing how that plays out. And with that being said, I should probably explore this contract that I picked up earlier today just to see where it's at. And so now this is why the rinse and repeat is a good idea, because the high was 122. I should have been disciplined. I should have waited for that. I'm not really that concerned, but that is kind of the reason why I like to do that rinse and repeat. And because I could have made $20 and then I could basically be buying back. But maybe it doesn't pull back to $1. And then I wouldn't be buying back, and then I'd be risking out on that potential 40% swing up to 140. And so this is all really just documenting my experimentation, doing one contract at a time, trying to be disciplined in these levels, placing limit orders, because, if I go back 7 days, let's see, maybe I go back 14 days. This, was trading at over $3 per contract, and now it's at, around $1. So it's good to be exiting. And, I wasn't swinging this contract back here, but if I look at this one, I believe I was swinging the $30 strike, and, I had swung this from 140, I believe, right around here, up to whatever 20% is, I believe 168. I could have made a lot more money. But I was disciplined, and then I almost re-entered right before earnings. but it didn't come down to my fill would have been 150. And so I was disciplined. I waited, and then I've been swinging this for 50 up to 60. And now, it's trading right around 68 cents. So my dip buy fill order, if I have one place, I'm not sure if I do, at 50 cents so far today would not have been filled. So, I think it's like good to be practicing placing limit orders, waiting for them to get filled, and if they don't get filled, then move on to the next one. And so that is what I've been doing, as far as hunting unusual whales goes. Rather than tracking like alerts and stuff from the Unusual Whales Discord, I've been trying to look up stuff that stands out to me based on technical levels. And for this video, that is, of course, GameStop, Neo, SOFI, as far as a put goes, and Unity Software. But I'm not heavy in any of these. And, I get left behind in most of them, but that's fine. I take profits and I move on. And so hopefully that was helpful for you guys. If you did find it helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thank you so much for watching, and take care, you guys.